Hello traders, welcome to Urwe Market. This is where we predict to you what will happen at the market the next week, and then we tell you where the highs and the lows of the days and the week will be. So welcome to you traders, welcome to you investors, welcome to you institutions. Thank you for tuning into Urwe Market channel. Thank you. So we'll start by analyzing the market. We're talking about the week of March 16 to March 20. That's Monday, March 16 to Friday, March 20. First of all, how do we predict the market? We predict based on trend, confluence, liquidity, timeline, arc, and then we infuse the news. Now, interestingly, with or without the news, you can trade successfully with our technical setup. As you can see on the screen right there, we have the trend on your left. So we'll be asking a few questions and answering them just using our technical analysis. The first thing is the trend. What trend is currently on now? Is the trend ending? Is a new trend starting? Are we in the middle of a trend? The answer right now is we are ending a trend. The trend that started March 5 is ending by Monday, March 16. And then there is a gap, a very small gap between Monday and then Tuesday, where we will enter a new trend. And the new trend of Tuesday, March 17 will run all the way to somewhere around April 22. Yes, so we'll show you how that goes. So that is it about the trend. We are exiting the one trend and then about to resume or, or enter a new trend, which will begin right here, as you can see. What about the confluence? The second way we analyze the market is using the confluence, using our confluence. We built this strategy so as to know where the price will hit and where it will reverse from. So right now you can see our confluence is loading. Our confluence tells us exactly where price will dip into, where price will pull out from, what liquidity price is looking at, and the highs and the lows. The confluence gives you easy access, easy way to know the high and the low of the market. We show you the confluence in each day. So every day we can directly see the confluences and then we tell you. With our confluence, we can see and tell you the highest and the lowest price that each day will have within next week. And we have two charts where we analyze the confluence. So we have one chart here, we have another one up here where we just see where the confluence is. So if we tell you buy, this is the lowest price for this day, then you can do so with some confidence. Remember, we have a rule for our confluence. If price dips into our confluence, we have over 98% chance that it will rise out. It will go back up, as you can see. We showed you when we reviewed the market. If you want to know how that works, please watch our previous video when we reviewed the market for last week, the week of March 9 to 13. In this video, we simply want to predict what will happen in the market next week. So the third way we will predict the market will be using liquidity. Liquidity The highest liquidity that we use is the yearly, the 6 months, the quarterly liquidity. And we also have our rule for liquidity. And our rule is that if a ball hits the ground, it has to bounce back up. And that ground is the liquidity. If a ball hits the roof, it has to fall back down. If fruits are too heavy up, they have to fall back, they have to fall down. So that's what happens here in the market. We see where the liquidity, that price will bounce off, price will hit it like a ball and then bounce up. If that liquidity is strong enough, it raises that price very high. If that liquidity cannot sustain it, the price breaks it. So the fourth way we analyze the market is using our timeline. Our timeline, we have our timeline in the trend, we have our timeline in liquidity, we have our timeline in the confluence, we have our timelines there everywhere so that we can see. And our timeline is the steering of the market. The steering, you can just see timeline. This is week, this is 6 months timeline, this is the monthly timeline. All of them had an impact on price. This is the monthly timeline. All of them had impact on price. This was the yearly timeline. As you can see, the yearly timeline is the strongest. All of them have impact on price. Yes. So if the market has not yet satisfied all requirements for you to go in and buy, and then you enter the market too early, it will take you out. It's like steering a car. If at a bend you steer too sharp or too early, you may be in a bush or collide with something. If you steer too late after you have passed the bend, you may still be in the bush or still hit something. So the timeline is the steering. You see, when price comes, this is where you steer. And then the steering took it all the way back up here. That is the work of the timeline that we have developed that helps us to know when when the price is turning. So we have a rule for our timeline. Price will bend here or shortly thereafter. Price will always respect the timeline because we got it from the last angle procedure. Okay, the final one is the news. The fifth way we analyze the market is using the Gann arc, which we have said a lot about that already. And then finally, we infuse the news. So what we'll do right now is go right into it, talk about what the market will do next week. So let's start. What is the trend? The trend is saying that we are ending this, but the market is pointing downward. What is happening here? Now, we want to show you two ways of reading this market. That's why we have two screens open for you to see. Yeah, we have two screens right there. So you can see it the way the trend says it. You can see it the way the Gann arc says it. You can see it the way the confluence says it. First of all, the trend. Trend says that the market hit here and went back up, came back again, went back up, and it's back here. So what will happen next? Urwe market foresees that this price will drop either on Monday or Tuesday. But let's invert the scale so you can see what will happen. We foresee that there will be a cup handle formation on Monday. Something right here, a cup handle formation will form somewhere here because this is also a strong liquidity. So price will not just pierce through it like that. So there will be a cup formation that will form somewhere here on Monday. and let's give it this. Good. So it will form somewhere there. But because we foresee that price will break this level somewhere Monday, Tuesday, it should still be able to break and come down. Come down. We inverted this scale, so this is pointing up, so you can see it. So let's go back to the way the scale is. So we expect that price will bounce up here a little bit, come up here, and then pierce down. Why do we say that? We go to the confluence chart. First of all, liquidity. We see lots of liquidity right here. So it has to sweep through, price has to sweep all of this liquidity, pack it, and go upward. The upward movement will be by next week or late next week into the following 2 weeks. So now the trend is about to end and then start a new trend. What happens to all the liquidity here? Let's delete this and show you more. If you bought here on Tuesday, March 3, your liquidity would have been here. Your stop would have been there, somewhere here. So if you bought here, your stop would have been here. If you bought here on Monday, March, when NFP pushed price down up to this, if you bought here, your stop would have been here. That's the logic of trading. Good. Now, what happens to these huge stop losses that are here? Price wants them. Price wants to lick them up. So this price that we see here will sweep them up into this. Now, why do we believe that will happen? First of all, a new trend will begin, and then we have a timeline here. This liquidity will not sustain an upward push. The news that we have said that initial jobless claim was good for USD. Fewer people complained that they had no jobs. Then the job openings was way higher than what was forecasted. Then on Monday, there is no high impact news. The last high impact news was on Friday. So price will play out on Monday and Tuesday. The market will play out following the news of Thursday and Friday last week. The market will satisfy that requirement. And so it will drop in here, sweep this liquidity, get to this last angle, timeline, and then push forward. So all of this liquidity here, price wants them. That is it about the trend. We go over to our confluence. Our confluence is even very interesting. Our confluence says that price is dipping. Now this price right here, the falling knife, is piercing anything. So it wants to pierce through this. Now there is a massive amount of liquidity that is shown here, and that is what we demonstrated here for you to see. So that amount of liquidity that you see there is right here, right there, and we showed you on the other chart, as you can directly see, right there. Those were where the stops were, and this price wants to lick them up before it goes up. Now let's explain what happens in the confluence. Now, if price falls into this place, it will go up because there's a strong confluence there. But what we see price often likes doing is to avoid this place because it needs more liquidity. Is to avoid this, which is why we believe This price should fall between Monday or Tuesday, break this level between Monday or Tuesday, because it wants to avoid this. Price would want to avoid just dropping into here. It wants to sweep from under, sort of like an undertaker. Price wants to take it from under, take it under, undertaker, take it out, come back here. So this is what we foresee will happen in the market next week. Price bounce off here a little bit, come back into this liquidity, come back here, and then go up. That's one possibility. Another possibility is this one right here, bounce up a little bit here, come back here, and then. But from what we see in the Gann arc, this second possibility may not. There's price the liquidity here, knowing that there is much liquidity under here, and price loves where liquidity abounds. So it will sweep here, go up here. Then looking at these, price doesn't seem like price will drop in here and go up. All right. We'll explain why we believe so using the Gann arc too. So we feel that it will go following this blue line, and then from here we can already see the highs and the lows where price will bounce off on Monday, come back here. This should be the high of Tuesday, because it wouldn't just come and break this and go up again. It will fall back down somewhere here, becomes the low of Wednesday. Right there, you can just see, become the low of Wednesday, and then the low of Thursday somewhere here too, and then it starts moving, climbing up. That's what we see will happen there. Let's delete this so that you can see the chart clearly. All right, there you go. That's it. So what about the Gann arc? The Gann arc. What does the Gann arc say? What does the Gann arc say? So let's go there. First, we want to analyze the higher time frame. We'll also go into the lower time frames. So our Gann arc tells us what will happen in the yearly, quarterly, 6-month level, and then the next chart tells us what happens even in the daily Gann arc, the weekly, and then the monthly. So this is why we feel that price will drop further down. Gold will drop further down. First of all, let's say, okay, good. First of all, if you go to the weekly time frame, just by looking at this, go to the weekly time frame. What do you see here? You see 2 weeks of red candles for gold. 2 weeks of red candle. A third one is needed to complete the 3 black crows. And then gold would have found its footing somewhere around 4,800 within next week, so that it can have a greater push, greater momentum to go back upward. Okay, so there is still some falling for gold next week. Now looking at the arc, we have our rules for the arc. Slide down behind the arc, mid liquidity, rise up, slide down within the arc, mid liquidity, rise up, pop out, break out of the arc, go upward. But look at what happened. It broke out of the yearly right here, went up, came down, broke out of the 6 months, came down. Now it broke out of the quarterly. There is not enough momentum for price to go up again. And so what will happen? Price has to slide down to where it will see enough liquidity. Now, if you drop a ball here, let's say you drop a ball here, what do you think will happen? It falls, it rolls down. You drop a ball, it keeps going down, it keeps going down, it keeps going down until where it can rest. And we've already identified some liquidity here around this zone, 4,800, where it can rest and then pick up. This arc is waiting for price. You know why we believe so? We've seen it happen many times over. This arc is waiting for price to come somewhere up here so that it can spring up. It's like a springboard. It will slap price up for gold. And that will be when we cross into the week of, this is where this week ends, into, I think, 2 weeks from now. Monday, this is Monday, and then this is Friday. Okay, somewhere around March, the end of March. Yeah, toward the end of March is where this will have, the end of March. Yes, price will climb back into here and then go up. Why do we believe that will happen? We've seen it happen many times. We've shown you on this channel before, but just as a reminder, look at it here. Look at it right here. This is it. One, it happened in December. That angle pushed price high up. That was one. And then the end of the quarter in September, same thing happened, as you can see. Price rose into it and went firing up. And then the next quarter ending, it got here too. Price was pushed up. So that's what happens. When you see that angle, you can be certain that when price gets there, it definitely has to fly up because this is the quarter angle. Imagine you holding this spring, this, and then you release it from here. Something is here, a ball is here. Let's say that's the price. And then you release this, it slaps price up. It just has to go up, just has to go up, that's what happens there. So we've analyzed the trend, we've analyzed our confluence, we've analyzed the arc, and then we are about to set our highs and lows. But just before then, let us bring the news. The news will tell us, okay, this is what we are to expect. And just by looking at our technical structure, you can tell the result of the news that will come out. PPI will come out on Wednesday. PPI, Purchasers Index. And what do we expect? Producer Price Index. What do we expect? We should expect producers to have less. Fed interest rate is coming up. Will this interest rate stand? Will it be cut? The forecast is that it will stand. It may stand because of the fact that dollar has been strong over all the news that have made it strong. So it's expected it will stand. But even if it stands, it's standing when gold has been pushed down, and gold should definitely rise. Now on Thursday, you have the Fed manufacturing index jobless claims. This jobless claim should rise. And then rising, jobless claim rising should indicate that gold is getting a little bit weak because there is deflation. If your price goes down too much, there can be deflation. It can go down and you wouldn't want that. You want some inflation to balance deflation, some deflation to balance inflation. And that is where the Fed interest rate comes in. Interest rate, how much are they willing to give out their interest rate, and then what percentage of interest rate are they interested in? And in that way, you can tell, okay, they're trying to balance inflation or they are trying to increase the cost of things and cause inflation. So we're looking out to see what news will come. But from our technical structure, technical analysis, we can already see this. So right now we have analyzed that our So now let's set our highs and lows. Let's set our highs and lows, and then we can round up our analysis. Okay, so we expect gold to drop into somewhere here. So this will be the high and the low for Monday. We also expect gold to rise on Tuesday to somewhere here, and this will be the high of Tuesday, somewhere there. It drops back into Wednesday because when this news comes out for Wednesday, it should be good for the USD. So this news, so it should somewhere push price back into this liquidity again, giving it a double bottom somewhere here. And then because it would have met our it would have met our last angle here, price will definitely not pass here. If it came back down here, it has to hit this and go up. So we'll drop our prediction on our Telegram channel, please. Our Telegram channel is Urwe Markets, URUE space then markets. Search for it on Telegram, join. Please subscribe to our YouTube channel and follow us, share, subscribe, and let people know about this channel. This is where we just analyze the market as openly as possible. Investors are welcome to consult with Urwe Markets to know what we do here, and consultations help. Consultations will help you to be certain about what you're doing in the market. So we'll share our this is exactly where we'll put our highs and the lows for Monday, Tuesday, Wednesday, Thursday. Somewhere on Thursday, price should come up here. This should be the high for Thursday. We can see a confluence there. And then price bounce back here on Friday. Oh, that's Monday. That is Monday. This should be somewhere the low. This should be the low of Friday right here. This was Thursday. Okay, so we'll move this a little here. We'll move this somewhere here. And then we